Hi, I'm Jeff Fouts, a tax attorney located in Metro Atlanta with a nationwide law practice helping clients who have serious IRS problems. I'd like to share with you another client case study from the thousands of tax clients we've represented. A man in his early 30s from Dalton, Georgia contacted us because the IRS had filed a tax lien against him, and he's afraid the IRS will seize some of his father's property. Our first step was to obtain a signed IRS Form 2848 and 8821 from the client. What these documents did is they allow the IRS, to talk with us about the client's case and to release important information to us. Our client's account transcript showed that he owed the IRS approximately $40,000 for several tax years. The IRS had filed a tax lien against him for this debt, but they didn't yet have the legal right to levy or garnish because they hadn't sent him the final collection notice in the mail. After talking some more with our client, he identified that the reason for his concern was that a piece of family property that he owned jointly with his father, he was scared that they were going to seize it, the IRS. And apparently his family had used hundreds of acres over the years. Most of it had been slowly sold off to pay bills and to buy other things. And our client was desperate to keep the IRS from seizing this last piece of family land. So it was obvious that it was quite an emotional issue to him, and it was also an embarrassment to him because he knew that he had endangered the family property. Generally, the IRS will not seize an asset that a taxpayer jointly owns with a non-liable person, but that's just a general rule. It's difficult to assign a dollar value to a 50% ownership in a piece of property if the other party is unwilling to sell. Even if the IRS did seize the property in its entirety, they would have to reimburse the other owner his 50% share of any proceeds from the sale. But again, the IRS can seize property, and they do sometimes. Property seizures are handled by IRS revenue officers. Our client did not yet have a revenue officer assigned to his case, so the good news is that the IRS is not in a position to currently be looking for assets to seize in his case. Not yet, anyway. We have requested our client supply us with his detailed financial information so we can determine what all of his collection options are. We'll, of course, be looking at ways to get the IRS tax lien removed. The IRS will release a tax lien under several different scenarios. If the entire tax debt is paid either in full or cash, when an accepted offer in compromise is paid in full, or if a taxpayer pays their tax debt down below $25,000 and they are in a monthly installment agreement that allows the IRS to direct debit their bank account for the monthly payment. Once we've received all the detailed financial information from the client and analyzed it, we'll be able to advise our client of the collection resolutions available to him and know which one is best for him. So what's the lesson to be learned from this story? If you're afraid the IRS may seize an asset that you own either individually or with a non-liable person, you need to quickly take action to deal with the tax problem so you can know what all your options might be. I hope this important client case study has helped you understand the IRS a little bit better and how tax problems are solved. Chances are you have questions or concerns about your own particular tax problem. I encourage you to pick up the phone and call me. I can answer your questions. Over the past 20 years, I've represented clients in all 50 states and 29 foreign countries, and I welcome your call. You can reach me at the toll-free number on this video or by email at jfouts@taxhelpattorney.com. I'm Jeff Fouts, and thanks so much for watching. Have a great day.